Hey, welcome back. Here is something that will either excite you or frustrate you, depending on how long you have been in crypto. Every major crypto rally in history was preceded by the same set of conditions, the same patterns, the same signals, the same market behavior that appeared before every single significant move upward. And the frustrating part is that most retail investors completely missed those signals every single time, not because the signals were hidden, but because the conditions that create them feel so uncomfortable and so discouraging that most people are not paying attention or are actively leaving the market exactly when they should be paying the closest attention. The exciting part is that once you know what these conditions look like, you will never miss them again. You will be able to recognize the setup forming in real time, and you will be positioned before the rally begins rather than chasing it after prices have already moved significantly. Today, I am going to walk you through exactly what happens in the months before every major crypto rally. The specific conditions, signals, and market behaviors that have consistently appeared as precursors to significant upward moves throughout Bitcoin's entire history. This is pattern recognition built from years of market history, and pattern recognition is one of the most valuable tools any investor can have. Let us get into it. The market is deeply negative. The first and most consistent condition that appears before every major crypto rally is this: the market feels absolutely terrible. Not just cautious, not just uncertain, genuinely, deeply, overwhelmingly negative. The news about crypto is bad. Projects have failed, high profile collapses have made headlines. Regulators are making threatening noises. Prominent voices in finance are declaring that this time crypto is really finished. And the retail investors who bought near the previous top have been sitting on significant losses for months and in some cases over a year. Most of those retail investors have either already sold their positions at a loss or are considering it. The excitement that characterized the previous bull market is completely gone. Nobody at dinner parties is talking about crypto profits. Nobody is asking how to buy Bitcoin. The topic has become almost embarrassing to bring up because the recent association is with loss and speculation gone wrong. This widespread negativity is not a reason to stay away. It is one of the most reliable signals in all of market history that a bottom is forming or has already formed. Here is why this pattern repeats so consistently. Major rallies require fuel. That fuel is new buying. And the conditions that create the largest pools of potential new buyers are exactly the conditions that negative markets create. Every person who sold at a loss is a potential buyer at lower prices if they change their mind. Every new investor who stayed away because of the bad news is a potential first-time buyer when the narrative changes. Every institution that avoided the space due to regulatory uncertainty is a potential large capital deployer when conditions improve. The worse the sentiment, the larger the pool of potential future buyers who have not yet participated. When the crypto market feels the most hopeless is consistently when the most significant rallies are closest to beginning. Accumulation by smart money is visible on chain. While retail investors are feeling negative and many are selling or staying away, something very different is happening on the blockchain itself. Smart money is accumulating. And the evidence of this accumulation is visible to anyone who knows where to look. On-chain signal 1. Exchange balances are declining. When Bitcoin balances on exchanges fall consistently over weeks and months, it means Bitcoin is being withdrawn from exchanges and moved to private wallets. This is the behavior of investors who intend to hold rather than sell. They are taking Bitcoin off the platform where it could be sold easily and moving it to cold storage for long-term holding. In the months before major rallies, exchange Bitcoin balances have consistently shown declining trends. The smart money is removing supply from the market. On-chain signal 2. Long-term holder supply is growing. Blockchain analytics distinguish between short-term holders who have owned Bitcoin for less than 6 months and long-term holders who have owned Bitcoin for more than 6 months. When the percentage of total Bitcoin supply held by long-term holders is growing consistently, it means coins are moving from weaker short-term hands into stronger long-term hands. This transfer of supply from people likely to sell to people unlikely to sell is accumulation, and it consistently appears in the pre-rally period. On-chain signal 3. The realized price is being tested. The realized price is the average price at which every Bitcoin was last moved on-chain. It represents the aggregate cost basis of all Bitcoin holders. When the market price is near or below the realized price, the average holder is at or near a loss. Historically, periods when Bitcoin price trades near or below the realized price have closely coincided with market bottoms and preceded significant recoveries. Smart money knows this level represents genuine value relative to the aggregate market cost basis. Price action becomes quiet and boring. Another consistent characteristic of the pre-rally environment is something that sounds counterintuitive. The price becomes boring. After the dramatic volatility of a bear market decline, price action in the months before a major rally often becomes quiet, choppy, and directionless. Large daily moves become less frequent. The price oscillates in a relatively narrow range without breaking decisively in either direction. This quiet period has a specific name in market analysis. It is called compression or consolidation, and it is one of the most powerful technical precursors to a significant move. Here is why compression precedes major moves. During the compression phase, supply and demand are approaching balance. The sellers who needed or wanted to sell have largely done so over the preceding bear market. The buyers who are accumulating are absorbing available supply without pushing the price up aggressively because they are trying to build positions quietly at favorable prices. This balance cannot last indefinitely. Eventually, a catalyst tips the scales in one direction. When the balance breaks, with new demand entering faster than available supply can absorb it, the price moves quickly because the order book above has thinned during the quiet period. The longer and tighter the compression, the more powerful the eventual breakout tends to be. Watch for volatility declining to multi-month lows on Bitcoin. Watch for the price to stop making meaningful new lows. Watch for the chart to look flat and uninteresting to most observers. These characteristics of compression are often visible in the weeks and months immediately before significant rallies begin. The market looks the least interesting right before it becomes the most interesting. Macro conditions begin shifting. Major crypto rallies do not happen in a macro vacuum. The broader financial environment creates the conditions that either support or suppress significant price moves. And in the period before major rallies, the macro environment has consistently shown specific shifts. Macro shift 1. Monetary policy turning accommodative. When central banks shift from raising interest rates to holding them steady or cutting them, liquidity conditions in the global financial system loosen. Capital that was happy earning yield in safer assets begins looking for higher returns. This search for yield creates conditions favorable for risk assets, including crypto. The anticipation of rate cuts before they actually happen has repeatedly preceded crypto market recoveries as investors position ahead of the expected liquidity improvement. Macro shift 2. Dollar strength plateauing or declining. Bitcoin and the US dollar have historically shown an inverse relationship over most significant time frames. When the dollar index peaks and begins showing signs of weakness, it creates a favorable backdrop for alternative assets that benefit from dollar weakness as a store of value narrative. Watching for the dollar to lose momentum and begin declining is a valuable macro signal that conditions for a Bitcoin rally may be improving. Macro shift 3. Risk appetite returning to broader markets. Crypto does not lead global risk appetite. It follows it and amplifies it. When stocks and other risk assets begin recovering from bear phases, the improving risk environment creates a supportive backdrop for crypto. Watching the broader financial markets for signs of risk appetite returning gives you context for whether the macro environment is becoming favorable for crypto. When monetary policy, dollar dynamics, and broader risk appetite all begin shifting in a favorable direction simultaneously, the macro wind is changing direction in support of the next crypto rally. A specific catalyst provides the spark. The conditions we have covered so far create the fuel for a major rally. Negative sentiment creates the pool of potential buyers. Smart money accumulation removes supply. Price compression stores energy. Macro shifts create the favorable backdrop. But fuel needs a spark to ignite. Every major crypto rally has been initiated or dramatically accelerated by a specific catalyst that changed the narrative or opened the door to significant new capital. Catalyst type 1: regulatory clarity or approval. When governments or financial regulators provide clear positive frameworks for crypto, it removes a major barrier for institutional and retail participation. ETF approvals, clear legal definitions that classify crypto favorably, or major jurisdiction approvals have historically acted as powerful rally catalysts by opening doors for capital that was waiting for permission to enter. Catalyst type 2: institutional adoption announcements. When a major corporation, sovereign wealth fund, or well known institutional investor announces significant Bitcoin purchases or crypto exposure, it validates the asset class to an enormous audience. These announcements shift the narrative from speculation to legitimate investment and bring new capital from entities that were watching for validation signals. Catalyst type 3: technological milestones. Major protocol upgrades, the launch of highly anticipated products, or the successful resolution of long standing technical challenges have repeatedly acted as catalysts that renewed confidence in the technology and attracted new developer and investor attention. Catalyst type 4: the halving narrative. As a scheduled halving event approaches, the reduced supply narrative builds in media coverage and investor awareness. The approaching halving creates a reason for the market to focus on a known positive supply event, and this narrative shift has historically contributed to pre-halving price appreciation. The catalyst alone cannot create a major rally without the underlying conditions being in place. But when conditions are mature, even a relatively small catalyst can ignite a significant move. Let me bring everything together into your complete pre-rally recognition framework. Condition 1: the market feels deeply and broadly negative. Sentiment is at extremes. Retail investors are leaving or have left. This negativity creates the largest pool of potential future buyers and historically coincides with the best accumulation opportunities. Condition 2: smart money accumulation is visible on chain. Exchange balances declining. Long-term holder supply growing. Price near or below the realized price. The blockchain is showing you what experienced investors are doing with real money. Condition 3: price action becomes quiet and compressing. Volatility falling to multi-month lows. The price making smaller and smaller moves in a narrowing range. Energy is being stored for the eventual breakout. Condition 4: macro conditions begin shifting favorably. Monetary policy turning accommodative. Dollar strength plateauing. Broader risk appetite returning across financial markets. Condition 5: a specific catalyst provides the ignition. Regulatory clarity, institutional adoption, technological milestones, halving narrative building. The spark that ignites the prepared fuel. Here is the truth that this framework reveals. The opportunity to position for major crypto rallies exists in the period that feels the worst to be in crypto. When you want to leave is usually when you should be most engaged. When the price is boring and the news is bad and nobody around you is interested is exactly when the conditions are ripening. Most investors experience major rallies as something that happened to them. They watch from the sidelines as prices explode and then chase at much higher levels. The investors who experience major rallies as something they were prepared for are the ones who recognize these conditions forming and acted during the uncomfortable pre-rally period. You now know what to look for. The next time these conditions start appearing together, you will recognize them. And recognition is the difference between being positioned before the rally and chasing it after. If this video gave you a clearer picture of how to recognize pre-rally conditions, please hit the like button and subscribe. Share this with one person in your life who always seems to buy crypto at the wrong time. This framework might change that for them permanently. Drop a comment below and tell me this. Looking at current market conditions, how many of these 5 pre-rally conditions do you think are currently in place? Tell me your assessment in the comments. I read every one and I want to know what you're seeing. I will see you in the next one.